Wallets here now with some answers. CPA and small business advocate Gene Marks. So, Gene, it has been a wild ride and expecting possibly another one today.
Yeah, it really has been a wild ride, hasn't it? I mean, look, first of all, a few things if you're watching this and you're an investor in the markets. I mean, the fundamentals of the economy are still fine. GDP growth is expected to be anywhere between 2.5% and 4% next year. And jobs are still, unemployment is still down. And consumer confidence, small business confidence, still very, very strong. So just rest assured that the economic fundamentals are fine. But there are some things that are driving the volatility in the market. For starters, some of the things that are being said out of Washington is creating some uncertainty that's making people buy and sell stocks more so than usual. Electronic trading really plays into this as well. I mean, 85% of the trades that are going on right now are driven by computers. And when they hit certain triggers, a lot of them start making trades automatically without really any type of emotion behind it. And a lot of that is driving the change in the markets. But let me tell you the biggest thing going on, and that is interest rates. Interest rates right now are the highest that they have been in the past 10 years. The federal funds rate right now is extremely high. And you know what that offers to us? It offers us options. For the first time, the individual investor and corporate investors now have other places to put their money than just the stock market. We can invest in bonds and money markets and interest-bearing accounts, and I think a lot of that is playing into the market's volatility. People are pulling their money out of the markets and putting it into safer places where they can now earn interest, more so than ever before.
So while it may be bad news for the stock market, while it may be bad news for the stock market, it's not necessarily bad news for individuals.
It's really not, because again, we do have a lot more options. But here's my advice: if you're an individual investor, hold on tight, right? I mean, when you see volatility like this, it's even more proof that you really shouldn't be out there on your own. You need to have a good money manager that's working for you. You need to be putting money into a mutual fund or an index fund and let the professionals do that kind of a job, and stick to the long term. I mean, the stock market itself, despite all of its volatility, is really the best bet for investors over the long term. 10 years, 15 years, you're always going to get your greatest returns, and you just got to kind of put aside some of these really crazy volatility swings if you've got your eye on the ball over the next few years.
Yeah,
that's my advice to all of our clients.
That's some good advice, because you watch it and you see it tank and then it goes right back up. So just hold on, like we said at the top of it. Thank you so much, Gene. Appreciate it.
Thank you. Take care.
Well, when we come back.